Hello, my name is Justin Cameron, and today I'll be talking about the United States monetary policy that was created in response to the COVID-19 outbreak. So, COVID-19, otherwise known as the coronavirus, is a pandemic causing virus that has taken the world by storm over the past few months. Interna- International travel has ceased, public gathering has ceased, businesses are shut down, and everyone is staying at home as much as they can. The United States has been hit the worst by far. The United States has the most confirmed coronavirus cases in the entire world. Uh, in most of the US, non essential businesses have closed. Many countries, cities, and states have ordered people to stay at home unless they need to do something essential, like going to the grocery store or going to work if they work in an essential business. Because of this, millions of Americans are newly unemployed. Over 7 million Americans have applied for unemployment over the past 2 months, which is the most ever in history. The fear that many have is another is that another Great Depression is coming upon us. Because of this pandemic, the government must respond. In class, we learned in the face of a recession, the government must act. The government should have the goals of keeping employment as high as it can be. They should also have the goal of stimulating the economy. They should be trying to control inflation and avoid interfering so much in the economy that private industries are unable to help. So, what did the government decide to do? The government decided to treat the government decided to create a unprecedented $2 trillion stimulus package. The package was designed to give money in the form of cash or loans to big corporations, including the airline industry, small businesses, private citizens, hospitals, and more. The goal of the stimulus package was to ease the economic burden that most, if not all, Americans are facing right now. Restaurants, bars, boutiques, malls are all facing distress. We are advised as US citizens to stay away from each other and only leave the house when we need something essential like food. This has caused businesses to suffer as citizens are only spending money on things that they need. Even though restaurants are open, they are dwindling with their employees as not as many people are going out to eat. Businesses or restaurants are only offering takeout and delivery, so places like diners don't have wait staff anymore. Uh, Car sale companies, they have been struggling as people don't even have a reason to drive that much, let alone go search for a brand new car. Hospitals are overwhelmed by the intake of patients, and they're forced to take COVID patients whether they have insurance or not because they must prevent the spread. So one of the most well-known benefits of the stimulus package is the personal checks given to all Americans who make under $80,000 and aren't claimed as dependents. So the Americans that qualify are the under $80,000 salary and aren't dependents, and they qualify for $1,200 with an additional $500 for every child 17 and under that lives in their household. I know this because I am the dependent over the age of 17 who was given no money during this crisis, nor were my parents. The point of these checks were to compensate for the delayed response by the government and to give a lifeline to citizens who need to pay their rent, who need to pay their bills, and need money to go grocery shopping after becoming newly unemployed. The money also encourages spending, as Americans who are still working can be given an added cushion and more certainty about their financial well-being so that they are less prone to save and harbor their money. Another popular measure in the stimulus package was the Paycheck Protection Program, otherwise known as the PPP. The Paycheck Protection Program was designed by the government to give money to banks to allow them to hand out loans intended for small businesses at a low interest rate of 1% with a 6-month deferment for payments. The main intention of the government with the Paycheck Protection Program was to support small businesses and, more importantly, keep employees getting paid. Because with more employees being able to get paid, that leaves fewer people on unemployment. Many programs or many problems have arose uh, publicly with the PPP. It's hard for the government to classify what a small business is, and with the most important criteria really to get a loan is that you just have fewer than 500 employees at one location. This allowed public publicly traded companies like Shake Shack or Sweet Dream to apply for $10 million loans, which attributed to a quick drought of the PPP fund. This angered many Americans as they don't see companies like Shake Shack or Sweet Green to be small businesses. Luckily, public pressure has caused these companies to return the money back to the banks. The problem is there isn't a law that prevents big companies that are eligible for the loans from getting the loans. The only thing that can really stop them is public pressure. Because the money ran out so quickly, many small businesses were still unable to get their loans in a reasonable time frame anyway. Another problem with the PPP is paid leave. So most of the money that you get as a business from these loans is meant for your payroll. And if you don't have paid leave, then you don't really need the loan to pay your employees. So as a business that maybe isn't operational, you have no reason to apply for this loan, meaning your business suffers. And then you have the businesses that are currently operational that are maybe suffering. They get money that's more beneficial for them as they have employees that they can actually pay. And then also the businesses that are shut down that can now afford to pay paid leave. Paid leave, that is also beneficial. So looking at what we learned in class and how the government should respond, and then looking at what the government should do, we learned that the government should keep employment as high as it can. It should stimulate the economy, control inflation, and avoid doing too much. What I learned from how our government has responded, specifically with the PPP response, this has helped increase employment by giving companies money that are open in struggling times to pay their employees. And then when it comes to the personal checks, I think the checks were very useful, and they definitely helped stimulate the economy as if that money wasn't that money was given to help people pay bills and pay their rent, and it would have been extremely bad for the entire country if millions of people couldn't pay their rent. I'm sure there are people who still can't do that, but I think the $1,200 was definitely a short-term solution for that type of problem. When it comes to inflation, I think the personal checks are dangerous, as it could probably decrease the dollar because the government is literally giving free money to citizens. When it comes to the PPP response, I like that better for inflation, as the money that was given out were just loans, so the money will be given back with interest. Overall, with the stimulus package, I think the government is doing a lot here. I think I'm actually like reminded of the New Deal when it comes to the stimulus package and the effect that it's doing. It's definitely more passive um, when it comes to employment, but I think the government is definitely doing something that if it didn't do it, uh, there could be anarchy, honestly. So the action that the government did was needed, but it was definitely a lot of action. Um, and I'm actually quite proud of how our government responded. And it shows that when we're in crisis, our legislators can work together to help Americans. And I'm hoping with what the government has done and will continue to do, we can ride the storm out together. And thank you for listening to my presentation. Here are my sources, and that's it.